Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. If you've been wondering, are the markets cracking up? Are they real? Is the whole financial sector just a big mirage? Well, here's somebody who thinks that's largely the case. Our old friend Danielle Park is back with us. Danielle, how are you?
Hey, Carrie, I'm good. Welcome home to Florida.
Yeah. Hey, I feel like I have come back home. It's so nice. It's 80-something degrees, and I've been inside all day with my air conditioner blasting, and I've just been interviewing like a demon and doing segments. So I'm missing the weather. But after you, I'm off to the pool. So
awesome. I've been thinking of when to bring in my outdoor furniture. So I think it would be much nicer to be in your scenario.
Yeah, that's for sure. But speaking of scenarios, the markets are certainly in their own very special scenario, aren't they?
Yeah, the effect of the interventions by the central banks and the liquidity pumps that we've seen the past couple of years have really created the largest disconnect that I've certainly ever seen in my career between the price and valuations of stocks relative to the growth climate and the likelihood of earnings going forward at this particular point. It's it's a composite of metrics that we follow, right from the Schiller PEs and the bull bear scenario, the comparison of the two groups, and all the stuff, 10-year treasury yields, all the stuff we follow. We've basically never seen it this bad except at very ominous tops in the past, which are a list of 1972, 1987, 1999, and 2007, and today. So you've got, I think, an awful lot of price risk presently in markets. And the other little factor here, which we've never really had before, Carrie, is this high-frequency trading impact. So you have the most probably volatile markets based on low volume and specious trading that's been going on by these algorithm machines that are showing up in flash crashes all over the place. So I think that technical underpinning being so weak in the price structure, as well as the fundamentals being so disconnected, you have a really dangerous environment, I believe, for investors at the moment.
You know what this is like, don't you? This is like Terminator, where the day when Skynet becomes self-aware and takes over all the computers, the algorithms, I think, have become self-aware, and they've just taken over the markets, and they're in the process of crushing them. To do a twisted analogy, but it seems like that's what's going on. There's no longer humans trading. It's machine against machine.
Yeah, and it's nothing to do with investing either. And I think that's where, on the one hand, there's people now selling services where they say to the average person, hey, buy my service and go to compete against these machines. We'll help you try and get a technological advantage. But, I say that way lies madness. Like, what in the hell is that? That's some kind of a Russian roulette thing, or it's this gambling mentality. And, on the weekend I was doing some thinking about this, and I'm not sure about your part of the woods, but in Canada, for example, it's really been just in the last 20 years that we've made this sort of move towards legalized gambling, and all the provinces have reaped huge tax revenue off of this activity of gambling. And it seems to me that it has really become part of the main consciousness, this idea that gambling is a legitimate or perfectly acceptable pastime. And I think that's part of what's infiltrated the mentality regarding the markets. Because why anyone would think that it's a healthy or acceptable condition to have this kind of Wild West trading going on in nanoseconds that, cancels everything. I know they've been trying to justify it as liquidity, but we've seen flash crashes so frequently in the last few months, Carrie. We saw it with the Indian Stock Exchange last week. We've seen it with oil a couple of times in the last couple of weeks, where you just get this huge gap down and everyone says, where'd the bid go? Well, there is no real bid, and that's the point.
Yeah, the computerized algorithms have taken over the markets. And, it's so funny that you talk about gambling, because they don't call it gambling anymore. They call it the gaming industry, but it's gambling.
Yes, and now we're going to take it that one step further to online gaming. Apparently, is now going to be the next condoned activity that will, that governments will look to for profits. And I think at the end of the day, free enterprise is wonderful, but it actually does matter where revenue comes from in a big karma kind of a sense. That's why we don't allow, for example, legalized drug trafficking or, legalized child trafficking. It's not enough in some cases just to say, well, some people make good profits off of it. I think there's a broader interest sometimes in controlling certain very sort of socially destructive behaviors, and I think that's where we are with this high frequency trading. Now, on the upside, there's some legislation being passed in the EU zone right now to employ a financial transaction tax, and a lot of people are very negative on that idea. But I've always said, basically, it's not possible to stamp out all this sort of Wild West trading, but if you make it so that the bid-ask spread, for example, has to be a full penny again, or a half penny, you're going to get a lot of this model completely unviable. So there's various ways to tax the activity that would actually stop it for most in all intents and purposes.
Well, it would stop this dead in its tracks, don't you? End of money printing. Stop the money printing. The liquidity no longer goes into gambling. Don't allow the large financial institutions to borrow for nothing. If there was such a thing as a market rate for a loan, and they were charged the market rate because they're all insolvent, you know what? They wouldn't have any money to do this with, and that would be game over.
That's exactly right. And there is no question that this pumping of liquidity has aided and abetted the negative fiscal policies. In other words, by keeping rates low for so long, the places like Italy and Spain and Greece have been able to forestall many of the necessary reforms they need to make. And the same thing is happening in the United States. Congress needs to be fired or do some work, and they are able to get away with doing nothing because rates have been artificially suppressed. So the only honest thing to do is to have, QE Infinity's been announced, released, and the market is now voting with its feet and saying, oh, well, that's all you can do. Well, that hasn't worked. We don't want more of the same. And that's the only trick that's left. So I think now if we see that rates, that the market stops believing in the magics of the Fed, and you get the next downdraft in terms of the cyclical in terms of the economy and in terms of the bear market, that we may finally get to a period where reform actually starts to happen in spending.
I don't know. I'm just kind of looking at this like Dr. Johnson looked at second marriages here, Danielle. Triumph of hope over experience. There's no will to do this because allowing the system to collapse, which certainly if you just pulled the liquidity out, it would be like the rubber duck in the bathtub. One minute it's floating real nice and the kid's happy, and the next minute the thing is circling down the drain. And, there's just nobody out there who has the guts to do that, even though that is what the system needs, because the system needs to be purged, and we need to hose down that ring around the tub, which is all these too big to fails with their trading games. And these algorithms are just games, just ways to pick up a few basis points and multiply that times a trillion. Pretty soon you're talking real money. But there's no politician out there that has any guts, and you say, have the Congress get to work. The only way those people will get to work is if we fire them all and get rid of their pensions and their benefits, and then they actually have to work for a living. They're in Congress so that they don't have to work for a living. That's why they go there, and they can get rich at the same time through their insider trading schemes.
Yeah, that's true. That is, certainly I'm sure the case with the vast majority of them. But the good news is this: monetary policy has run its course. So the intervention in typical monetary policy, where the Fed used to lower the interest rates in order to ignite consumption, that no longer has any rope left. So back in the good old days of the traditional measures, $1 of liquidity introduced by rate cuts by the Federal Reserve typically increased money supply M2 by $70. So 1 to 70, you had a pretty good bang for each dollar of liquidity introduced by the Federal Reserve. With the QEs that we've seen over the last while, that multiplier effect is not 70, it's 1.5, Carrie. Mm-hmm. So what I'm getting at here is we saw the big bang come in 2008-9. We saw all the reckless practices revealed, and the big players that were doing nothing but levering up imploded. What we had was another phase of intervention where they said, okay, well, let's try this. We have this theory. We've only had it in actual textbooks before, but we think that if we intervene with all these other additional easing measures, that we will be able to reignite the economy. Well, 2.5 years later, trillions of dollars later, a Federal Reserve that's now levered more than 50 to 1, and they still have not been able to ignite growth. And you're getting this anemic 1.5 for each dollar spent. So I think that that's the reason why I have more optimism this time, that what's happening now in the global economy, I've been saying for the last few years that trend growth during this new normal is going to be something like 3% globally. At the peak of the credit bubble, it was 5. It just made sense that you'd get a reversion back to the long-term trend, which is typically 3%. The IMF is now saying, this week that they see growth in the next year to be around 3%, maybe slightly more, and I think they're going to downsize that further as they go along. So what that means is that you're going to have this continued pressure from the have-nots, continued pressure from civil unrest, and people forcing some kind of fiscal policy that will try and address the real economy. So that'll be a shift from what we've seen in the past few years, which was these monetary tricks, which have now proven to be exhausted and pointless.
Yeah, totally pointless and destructive. I mean, really, when you look what's happened in the U.S., it's arguable that for every dollar of money that they print to try to make the thing go, to try to blow the system back up, the bubbles, keep it going, arguably it causes negative growth. There's an argument to be made for that for each dollar in QE, we're actually getting less for it and causing economic contraction. And when you get to that point where inflation doesn't work and deflation, they each cause the same result, you're probably better off just letting the whole thing deflate and starting over. And, it's getting to be the point where I think if you're the average working person, if you're struggling to make ends meet, if you really have lost faith in the system, you have to start wondering, maybe a new system is really called for here, because the old system has ceased to function in the way that it should have been designed and did function for many years.
Absolutely, and the Keynesian idea, they've cherry-picked the idea of spending to stimulate, but they overlooked the whole discipline of cutting back spending in the boom time in order to save, to smooth out the cycle. No one did that. So I think that we're now seeing the error of that way, and since there's no quick fix here, the pain is likely to go on for a considerable period of time. And we know through history, Carrie, that it has to be a long, drawn-out grind before you actually get any sort of change in the status quo in terms of policy or ideas. And I think that, that's what's happening. You're going to get a lot of the false prophets that were brought forward in the credit bubble that rode on the back of the great inflation from credit will be discharged, unceremoniously discharged, and sent either to the ranks of jail or just cast out of the social graces. And I think that's the phase we're in right now. And then they will no longer be the advisors, and we'll have to look for people that actually know how to manage business risk, who actually know how to manage capital, not just lever it up. And, I know you can accuse me of being an optimist, but I say to hell with darkness. I see a lot of good ideas in the world. I see hardworking people. I see innovation. I see the ability to make change at the margin, and that I think will be the salvation of as we go forward here.
Yeah, well, I hope you're right, because we need a break here. We need some new thinking. And in this case, new thinking is a return to basics. Get out of the Keynesian trap, because nothing good comes from stimulating demand. The only way to do this thing is to stimulate production. America is a nation of consumers now. You just consume, you consume beyond your income, beyond your reasonable limits, and that is not the key to healthy growth and a healthy economy. So Danielle, great talking to you. Got to get moving now. So jugglingdynamite.com for Danielle's latest commentary and aggregation. She's got a good article in there called Reckless Trading Leaves Legitimate Investors in Harm's Way. And, we're just going to see more flash crashes, I think, until everybody comes to the same realization, Danielle.
Exactly, until it can't be denied any longer.
Yeah, and we like to deny. I mean, I'm the first to admit it, but eventually the piper has to be paid, and you have to admit what's going on and what the reality is. So you want to hear this interview again, if you missed part of it, financialsurvivalnetwork.com. Go there, sign up for the newsletter, and check out all the stories. We aggregate close to 100 stories a day some days when our human aggregator, Stefan, is up to the task. All right, Danielle. We'll talk to you soon.
Okay, thanks, Carrie. Bye.
Be well.